In this video, I want to show you how to backtest and manage day trade portfolios down to 1 minute intervals. I use my money management algorithms, and the example is the stock index portfolio 34. I have 17 E-mini S&P strategies, 17 E-mini NASDAQ strategies, and this is what we're trading live right now. And the question comes up, if you trade each system individually, can you also manage it on a portfolio level? For example, what happens, should I stop if I'm down 5,000 on the day? Should I add a $5,000 profit target on the day? And so I'm going to go through this process, and I'm going to show you what it takes. You have to develop a portfolio of strategies to do this, and once you do that, you have to convert them to 1 minute intervals to be accurate to the 1 minute time frame, and I've done that here recently. I've taken many years to develop the strategies, but I've recently converted them all to 1 minute, and I've removed the .d, so they're all the non.d symbols in TradeStation. You have to add the save indicator, which sends the information to another chart in TradeStation. It's part of my money management algorithms. And then you have to review the combined equity curve. You export the combined equity curve, and then you can open it up in a new workspace, and then you can backtest additional money management to the equity curve. So I'm going to go over each of these steps. So you develop a portfolio of strategies. I've already done that. Like I said, it's a multi-year process to develop many strategies. I've already converted them to 1 minute chart. That's a matter of coding. And so if you apply this to your set of strategies, you have to be down to 1 minute intervals, and they can be different. I have 17 S&P strategies, 17 NASDAQ strategies. They can be different markets. They can be different intervals if you want, but it's only going to be accurate. Down to the most accurate is 1 minute. If you're on 5 minute intervals, then you can only update your money management on every 5 minutes. In this case, you can update your money management every 1 minute. And so then you add the save indicator to each chart. And if you take a look here, the save indicators are on each chart. And so I'm going to go over each chart on the S&P and on the NASDAQ. I went back 3 years on this. So let's take a quick look. And I'm able to take a look at 3 years worth of data. Now, in our portfolios, we combined a lot of simple strategies. So you're dealing with sometimes these have slippage and commission, so they can have ugly equity curves. They're not perfect straight line equity curves in every case, but some of them are better than others. Adaptive moving average. The previous one was tick pulse. Here is tick wave. Here is Cobra CT3 1 minute. Some of them trade more frequently than others. Here's Cobra CT3 2023 version. Doesn't trade as much. SR Counter Trend 2 doesn't trade as much. The more dots, the more frequently it trades. These are closed trade equity curves. This is SR Counter Trend 2 V2 1M. This has a better longer term back test. This is only 3 years. And then if you take a look at tick count trend, this is kind of an ugly equity curve. It does better during low VIX, and we've been in high VIX recently, so we have a low VIX strategy in there. Mirror works really well. Gap fill 1 works really well. Dynamic tick pullback, more of a counter trend type choppy opening chop. You can see how this one works. Opening chop 2, and then you have tick count trend dynamic turnaround. Chop news, very straight line equity curve recently. Tick chop news, recovering. Gap continue and reverse. You can see these equity curves. They're not perfect, but when you combine them, you have diversity of methodologies and trading systems. This is Cobra 3 2021M, 2022 1M. Viper and adaptive moving average probably have the two best equity curves as far as straight line equity curves the last few years. And then gap continuation. You see that equity curve there. Robot. Here is the robot equity curve. This is one of those strategies I want to highlight. It has a low winning percentage. Only 21% of the trades are winners. With a very tight stop loss. And then the winners are much bigger than the losers, or can be. And you can see that in this equity curve. So AT 2022 NQ, it's gone through a long losing streak, but we believe in this strategy longer term. EVP1 long short. You can see it's a volatile equity curve. Freight trades frequently. Here's EVP1 long only. This is tick pulse 2022 NQ. Tick count trend 2020. And here is tick pullback 2023. Here is tick reversal. It's the divergences in the market have affected this strategy recently. Big divergences between the narrow indices versus the larger indices. Tick long aggressive and bounce reversal. OPV short only. Magnificent 7. SR counter trend 2. Not many trades. Momentum reversal. Very different than most of our strategies. And so different strategies, different methodologies provide us with diversity. So all these save indicators at the bottom, export the data. It's a sender indicator of the equity curve for both of these charts. And I have over 100 of the save indicators. You need a different save indicator for each chart. And then you come in here to the indicator and it receives all that information and then it combines them into equity curves. And you can see red is the daily P&L, and recently we've gone through a drawdown, and so you see the red is the negative, and then you also see today, for example, it's up just a little bit on the day right now. You can track this. The beauty of this indicator is you can track your combined equity curve on a 1 minute basis if you're down to 1 minute. What's the result of all these strategies combined? You can see that in the save indicator, or the indicator from the information from the save indicators. And then you have these other, the red line is the daily P&L, the blue line is the max drawdown on the day, 740. The yellow line is the current drawdown from the equity peak. So you can be up on the day, but still in a drawdown from its equity peak. So right here on this bar right now, this only updates at the end of 1 minute bar. Intra-bar, I cannot look intra-bar when it's from another chart. You have the intra-bar, a look inside bar, intra-bar, feature in TradeStation, but when you're using DLLs and passing information from other charts and workspaces, it only works on an end of bar basis. So you could go down to 1 second or 1 tick charts potentially, but it's difficult to have more than 6 months of data. And we have 3 years of data and we're down to 1 minute. And so if you look at this, for example, the daily P&L is 212.50. The daily peak is 1,070. The maximum drawdown is 1885, and the drawdown is 857.50. And then it's updated on the next bar. You can see here the daily P&L, daily profit is 357.50. The peak was 1,070, so the drawdown is 712.50 from its maximum peak, and the maximum drawdown on the day was 1885. That's the difference between the highest profit and the biggest loss on the day. And so this is the indicator, and I really like this indicator. And so what you can do with this indicator is it's an easy language file, and it can be modified. So if you have less than 17 strategies, if you have different markets, you actually have to go into that indicator and you have to change the symbol. It's an easy indicator to update when you first look at it. There's a lot of code, but you can quickly go through there and change the symbol. I'll have the specific coding training in the money management algorithm member area. And so once you do this, we're reviewing the combined equity curve right here on a daily basis. We can look at it on a longer term basis because you can export this data and then open it up in another workspace, and you can see this green line represents the daily P&L for the combined portfolio. And so this is not the market, this is the P&L. So you're going long your own portfolio every day, and then you can view the strategy performance report of this. And so this is the strategy performance report going back 3 years for the combined equity curve for all those strategies. And you can take a look where this drawdown is. It's in a normal drawdown. This is the worst case drawdown in the last 3 years, about 28K. And this, I'm going to show you the code for this because there's really nothing proprietary about this. This represents being in the portfolio each day, getting in at the beginning and exiting at the close, trading every single day, and then what the drawdown would be. Each trade represents a day. So there's 725 trading days. There's no stop loss on the portfolio intraday. We're just taking the trade. We're trading at the open. We're exiting at the close. And so this performance report represents your portfolio, what your portfolio feels like on a daily basis, and it's not the market. And so I'm going to show you the code for this. Before I do, I'm going to show you what we've done so far in this video. I'm going to provide additional training for the specifics on this for the money management algorithms. In the money management algorithms members area, and upload some new code for all these indicators. The stock index portfolio strategies are not part of the money management algorithms, so I'll have some other examples for that. But what I've done, I've developed these strategies over the years, converted them to 1-minute charts. I've added the MMSave indicator to each chart. We've looked at the equity curve. I've exported it. You've seen this exported equity curve. I sent it to a text file using a print statement, and now we're going to look at the code and add additional money management algorithm to the equity curve. And so I'm going to show you that in the next in the easy language code. So once you have a text file that you've exported it and you've opened it up, this text file in TradeStation, you can run back tests on this. And for example, this is if don't trade on FOMC equals 1. I have a function that will not trade on FOMC dates, a list of dates, and the date is not equal to the data 1. And so on the very first bar of the day, we're going long on this. We buy 1 contracts, next bar at the market, or this bar on the close. It's better, actually more accurate to do this bar on close. So let's do that because these data points are at the close of each 1-minute bar. So if you wait till the next, if you buy it in the next bar at the market, then it buys on the next bar at the close. It's 1-minute delay. So you have to do this bar on close in this case for this accurate back test. And then if time is equal to 16:14, then sell next bar at the market. And so I'm going to update this. And you can see these things are green. I've commented them out. These are some additional ideas I've tested. I've tested many, many more ideas that are down below here that I don't want to have too much on the screen at once. It's a lot to look at. So I'm going to look at the difference between this bar on close and next bar at market. So this improved the results just a little bit. 26,780, reduced the drawdown, and you can see 1.56. This goes to 58.28 going over the last 3 years. And you say they're all long trades, but this is not the market we're looking at. We're looking at my equity curve. And so if you're talking about short trades would mean that you're doing the exact opposite of all your signals. You're turning your long signals into short signals and your short signals into long signals if you shorted your own equity curve. And so that's a completely different thing. So we're not talking about the market. You could do so many different tests with this. For example, let me show you an example of what I'm talking about. For example, I've added, you can see the @NQ at the bottom. I've added the NASDAQ. This represents an equity curve for the S&P and the NASDAQ. So you could add, you could say, for example, you could look at the NASDAQ and say, and the close of data 2 is greater than the open D of data 2. So we're up on the day. So you're just taking trades, long and short trades in your portfolio. If the NASDAQ is up on the day, you're taking long and short trades in the S&P and the NASDAQ strategy if the NASDAQ is up on the day. And so you can click on that, you can verify it. Let's see what happens when we do that. If that helps the portfolio or if that hurts the portfolio. You can see here 58.28 is the total net profit. The drawdown is 26K. So this increases our drawdown. And so it's good to not add that extra rule in this case. What else could we do? We could say in yesterday's, let's comment this out so it goes away. and day of week of date is equal to 5 or 4. That means Thursday or Friday. Add Friday first. I know this will, you could test each day of the week to see which day of the week is better. You could test if day of week of date is equal to 1, or if day of week of date equals 2, 3, 4, 5. And then you can click on this, and you can wait for the results to see what happens. So nice gains. You see, I think the previous was 1.5 million with a 26K drawdown. Now it's 911,000 with a $24,000 drawdown. Let's look at the equity curve on this. Nice smooth equity curve. It's currently in a drawdown, and we're trading it here on a Thursday. And let's think about what else could we test. How does this strategy work each hour of the day? You could test that. Let's turn this off and say, and time is greater than 9:30 and time is less than 10:30. And then if time is equal to, if its strategy enters at 10:30, you don't exit at 10:31. So we'll just say if you enter in for an hour and then you exit at 30 minutes at 11. So at least give it 30 minutes. If you don't want to just say, we're entering at 10:28, 10:29, and then boom, you get out at 10:30. So we'll just give it an extra 30 minutes, trade within an hour, and give it another 30 minutes till exit. And then we'll see what happens if you just trade in the first hour. We'll look at each hour of the day to see how this performs. So the first hour is pretty good. The first hour's outperformed recently. Let's look at the second hour. We'll go 10:30 to 11:30. So you can see how that has performed, and then exit at 12. Now once you do this, once you find an algorithm, for the most part, I love being able to test these ideas. So not a lot of gains here if you just enter. There's not a lot of strategies. This is pretty interesting. I'll have to go back and check this, but that shouldn't be right. If time is greater than 10:30 and time is less than 10:30, then buy this bar on the close. And so if time is equal to 12, then sell next bar at the market. So I have to get rid of this statement right here. And I need to do that for the previous setup as well, because it would only enter on the first minute of the day. The previous test was only on the first minute of the day. So, and then we just exit it. So what you see here is from 10:30 to 12:30, here are the results. Pretty good equity curve. What about from 9:30? Let's go back. We have to test this again because that wasn't accurate. What the previous test was doing was only entering on the first bar of the day and then exiting at 11. So even though we had less than 10:30, because we have and data is not equal to data 1, it was only entering in the first bar of the day and exiting at 11. So what happens between 9:30 and 10:30? Time is greater than 9:30 and 10:30. So let's look at the results between that time frame. It's really just entering on the first bar. Like if it's, on this case, it's entering at 9:30 and then exiting at 11. In the next case, it's entering at 10:30 and exiting at 11. And so you really have to add another rule to potentially take other trades. So you could test each hour of the day. What you could also do is you could say time is greater than 9:30 and time is less than 10:30 and the close is less than 0. That means that you're down on the day. Let's just make it minus 1,000. What happens if you enter within the first hour if you're less than 1,000? If you don't have an additional rule, and if you just have this rule, it's always going to enter on the first bar of this window. So let's add an additional rule. And we can see what the results would be. And so if you enter when you're down 1,000, which seems like a better way to trade, it doesn't work out as well. What happens if we enter if it's greater than 1,000? I've actually found that it's better to enter as it goes up. And so let's look at this and see what happens. So it's better if you buy a breakout, if the strategies are doing well, if they're up 1,000 on a 1 minute closing basis in the first hour, it's better to buy it than if it's down 1,000 in the first hour. And so let's look at that. And you can see that it's not the drawdown is bigger. What about if you do that? What if you do that all day long? Let's say, what if greater than 10:30 and time is less than 15:30 and we exit at 16:14, and there. Let's test that. We're entering any time during the day between the open and 30 minutes before the cash close. If the strategies are performing well, we're getting in. On a $2,000, we're missing $2,000 a gain. We're waiting until it goes up instead of getting in on a drawdown. And so what happens here, you don't make as much. It's not as profitable as just trading it the way it is, but it still has some nice results. Recently, it's not the best way to trade recently. As you can see, it's not the best way to trade, not the best way to trade here. So this strategy is in a good cyclical drawdown, good time to start trading it. Let's look at how do you add a stop loss to this? You don't just use set stop loss because these are closing bars. If close is less than, if you get in at plus 2,000, your stop loss would be minus 3,000 would be a $5,000 stop loss. Then sell this bar on close. So this seems to give you a little bit of an advantage as far as controlling risk. Your drawdown is about the same and your performance is less, but if you really want to control your risk on a 1 minute basis, your stop loss is $5,000 because you're getting in if the close is greater than 2,000. So it could be after a minute, it could be plus 2,500 or plus 3,000 because this could surge, and then you get in. And then if it goes down to below minus 3,000 on a 1 minute basis, you can see the largest losing trade is about 7,100. Keep in mind, these bars are only updated on a 1 minute basis, and it'll be very hard to do this on a tick by tick basis. There's not enough resources. It would crash the computer. There's only about 6 months of data, but trying to load 34 strategies on one tick charts and actually converting them all to one tick charts would be impossible because some of the data twos, it wouldn't work. It just wouldn't work. So it's as accurate as you can be realistically is 1 minute charts. And if you had a $5,000 stop loss, you could still, because these are only 1 minute, within 1 minute accuracy, you could still get an additional loss. But you could control your risk on a daily basis to approximately $5,000, but the $26,000 drawdown is about the same and the profit is less. But that desire to control daily risk can be nice. It can be nice to do that. What else could you do? One of the things that I've found, let me see if I can remember here, was to, instead of buying the close is greater than 2,000, here's a neat way to think about it, and the close is greater than the low of the day. You can still use the low of the day even though these are closing values plus 2,000. So I've tested the close is greater than the low of the day plus 1,000. So if the equity curve is down, so you're not buying it if it's up 1,000, but if it's, say the strategies go against you right away. Maybe it's down minus 5K, and then it comes up, boom, it's up to minus 4K, minus 4K. Then you start getting in. That doesn't mean it'll go up. It could go down from there, but you're taking a reversal on your equity curve. That's when you start. So the close on a 1 minute chart is greater than the low from the lowest low of the 1 minute on the day, and it's recovered $1,000. Then you buy this bar on the close. One of the tricks that I didn't add on the previous test, and you have to do this if you added additional rules and you want to have this stop loss, what you have to also do is say and entries to day of date is less than 1, because if you don't, then you'll get out the close is less than $3,000, and then you'll get in again. And so let's do that. And close is greater than low of the day plus 3,000, entries to day of the date, and we're adding this $3,000. The close is less than negative 3,000. This wouldn't really work in this case, because what if you got in, the close was minus 7,000 and you got in at minus 6,000, then the very next bar it would get out. So if the close is less than the entry price, minus 3,000, then sell this bar on close. And so that would be the way to do a stop loss in that case. And so let's see how this backtests. Let's see if it even backtests accurately. This is an intense algorithmic training video on combined portfolio analysis. You have to be very careful about the way you test this and set it up, because if you don't do it right, it'll be wrong, and you'll have a lot of bad. See, this doesn't work that well, because it has a $57,000 drawdown right here. So it still looks pretty good. If you look at the equity curve, it still looks pretty good. And you can see, for example, getting in on these reversals. But let's take out the stop loss and see. Let's take out this stop loss and see. Maybe that's affecting it, and test it again to make sure you're accurately backtesting it correctly in the context of testing a 1-minute equity curve. And so here are the results. If you do this, it doesn't really make the strategy any better. If you do this, the close is greater than the low of the day plus 1,000, and you could say and the low D of 0 is less than negative 3,000, and then you come back and you get in at the greater than minus 2,000. So let's see how that works. So it doesn't improve it. Plus 1,035, 379,000. Let's go back and look at the strategy raw, and it's what I found it's hard to improve a trading system. We showed how you could manage the risk potentially with a drawdown. If don't trade on FOMC and date is not equal to date of 1, then buy this one bar on close. And let's look at look at the raw setup. Just the raw setup. Get at the beginning of the day, exit at the end of the day. No stop loss, no profit target, no extra money management algorithm added to it. I love this indicator. I love this setup because it allows you to test these ideas. This is an ongoing research to test this. Once you do come up with a strategy that you would like, you would then have to reprogram. You would have to create a second workspace for each one of these and program the code that you come up with into those strategies. And so 5828 is the raw strategy, and so it's hard to improve that. Let's look at just the stop loss. What if we just want to have a stop loss and a profit target? If close is less than negative 5,000, then sell this bar on close. If close is greater than 7,000, then sell this bar on close. So you don't improve the strategy when you do that. Here's the equity curve. The recent equity curve is much better. Then you could also, in this case, you could add a VIX. Say what happens if VIX is down there. What would we say? Like insert symbol $VIX.X. 1 minute bars, 3 years back. We'll just add this rule and say if the close of data 3 is less than 17 and then we'll use a stop loss and profit target if the VIX is low. How about that? There's just an infinite number of ideas you can test. Now if you do this, you have to make sure that you have VIX in all your charts. If you automate it, you could maybe manually do this as well, something simple like this, because it's once you come up with something like this that would improve your strategy, you would have to add, it would be difficult to actually program it. You'd have to put the code for the indicator in each strategy and then add code that would make sense. So let's look at verifying this. Now if the VIX is in there, VIX is data 3, what happens if we add a profit target and stop loss on our portfolio if the VIX is low? So interesting results. This might be the way to go. What we're seeing here is that in recent performance it's better, but overall this is 5,800 without this rule. But recently in this low VIX environment, which the last few years the VIX is lower than it's been, we're at 13.3 right now on the VIX, and you can see that this is up instead of down. And so there's maybe some ways to adjust your stop loss and profit target during low VIX versus high VIX. So this might be the way to go. I'm going to test it less than 20, and then I'm going to finish up this video. So when VIX is less than 20, the drawdown goes down a little bit. The net profit also goes down. The net profit as a percentage drawdown goes down. The recent performance is nice, $5,000, down only $5,000 this month instead of $17,000 so far, I believe. And so that is the money management algorithm. I love this setup. I love this indicator and the way it presents data. In this window, you see it live, and you can see it's up on the day, about 900 right now. And we have about 3 NASDAQ strategies that are long, 2 S&P strategies that are long. And this is a static chart of the exported data. It's static, it's not moving, it's not live. You can back test it. The one thing that you have to do is add additional money management to equity curve. If you find something you like, then it has to be custom coded into each strategy. You have to include the code from the MM indicator so that it has this information, and then you have to custom coded update for each for each strategy in the portfolio. And so this is a way to use the money management algorithms in a portfolio environment using this indicator, finding a setup that you like, and then you have to custom code the update. And once again, most of the things you think will work don't, but if you ever do find something, this is the way to find out if something actually works.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.